I don't really think that Bitcoin's going to be currency in the U.S. ever, nor do I think it should be. I really think, logically, it should be treated as property. It's like owning a building or owning a bar of gold or owning a share of stock. It's property. And what it's doing is it's demonetizing other forms of property. If you have $1 million and you have to choose whether you buy collectibles or a house or a second house or an ETF or a share of Apple stock or start a business, or buy art or buy a bar of gold or buy Bitcoin, that's the fungible decision you have to make. Where do you want to store your monetary energy? And clearly my message, I even posted today, it's like gold is no longer a store of value for monetary energy. That's why it's up 0% in a year where the S&P 500 is up 400%. It's pretty clear the marketplace thinks that stocks are a better store of value than gold, and the marketplace thinks Bitcoin is a better store of value than stocks. So ergo, digital property is demonetizing other traditional assets. And I think that the way the world will revolve is eventually they'll figure the best architecture for digital property is proof of work, decentralized Bitcoin mining, or mining in general. And I think the architecture the world's going to adopt for applications is proof of stake of some sort. Lightning is a proof of stake network. It's just staked with Bitcoin. These other staking networks, they're staked with something. I happen to think if you're going to have a staked network, you're better off to stake with a financial asset that is uncorrelated to your network.
Bitcoin should never be used as a currency. That's because Bitcoin isn't even a currency, but rather its property. That's the message out from Michael Saylor, who believes Bitcoin will demonetize all other forms of property. Why? Because it's the most superior form of property. It's quintessential monetary energy. This is why Bitcoin will go up 350x over time from current levels. In one of his most recent interviews, Saylor explains why Bitcoin should be treated as property rather than a currency. To him, Bitcoin is a form of digital property similar to owning real estate or actual gold. He believes that Bitcoin is already demonetizing other forms of property as more and more people are now choosing to store their monetary energy into Bitcoin rather than traditional assets like gold or stocks. Make sure to stick around to the end of the video where Saylor shares the exact reasons why, over time, many countries will eventually adopt Bitcoin. Also guys, if you want to stay most up to date in the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Michael Saylor with his explanation onto how countries will adopt Bitcoin.
I think you're going to see digital property, digital currency, and digital applications. Digital property is Bitcoin. It's like the block of Cyber Manhattan, and it'll be based on a proof of work network, and it'll be mined. And digital currencies, they're going to be stable coins and CBDCs. With digital property, you optimize it for integrity and durability. Well, you want it to last for 1,000 years. Like the city block in Manhattan, it's on granite. Manhattan's built on granite. That's why it's still there 300 years later, because you can build something, it's still there. You don't build on sand, you don't build on clay, you build on granite. Do you want it to move fast? No, you don't need it to move fast. Does it need to be functional? No, it needs to be inertial. If I'm going to lean on something, I need to know it'll be there in 100 years. What happens if you build on sand? Well, what happened at Surfside in Miami Beach a week ago, right? That's what happens, right? It's riskier. You build on granite, you build steel, heavy. That's property. The currencies are going to be optimized for compliance and compatibility. You got to do transactions, and you're going to get KYC, AML regulation. And I think you can expect most countries, they're going to wrap any exchange and any functionality around stable coin with AML KYC because it's just natural, because they want to make sure the capital doesn't evade their tax or their regs. And then I think you got digital applications, the smart chains, the smart contracts, DeFi, all the functionality. Well, applications are optimized for functionality and performance. I need to do 1 million transactions a day. I need to do 1 million a minute. I need Turing complete. I need to do flash loans. I need to do stuff. If they're a platform, they're wanting to be the building on the city block in Cyber Manhattan. Because what can I do with a building? The Rockefeller Center is standing in Manhattan. It's nearly 100 years old. The city block is 1,000 years old. The Rockefeller Center will probably stand another 100 years, but maybe not much longer than that. A lot of businesses have come and gone in the Rockefeller Center over that 100 years. Insurance companies, banks, discotheques, restaurants, membership clubs, condos. So digital applications are either a platform or they're an application. And the question is, are you making an investment for a 100-year time frame? Are you wanting to own the building for the next 50 years? Are you wanting to own the business that might be good for 5 years? There's some businesses that lasted, 50 years, not many, right? So I would say it's like property is a 500-year time frame, a building or a platform is a 50-year time frame, a business is a 5-year time frame or 10-year time frame. They've all got different risk reward. It takes a lot more capital to own the property. It's capital intensive, right? You can start a business in New York City today and you can rent the space for a year, right? It doesn't take a lot of capital to start the business. To build a building is intermediate capital. How much capital do you need? What's your time frame? What's your risk tolerance? Bitcoin will be regulated as property and you'll pay property taxes on it and you'll have to disclose. I cannot transfer, $1 billion of property from here to Africa privately without paying taxes on it. On the other hand, an application, if you're going to get in the insurance business and you're going to sell life insurance on a DeFi network to a consumer, you're probably going to get your door knocked on by an insurance regulator that's going to say, you sold life insurance and you violated the following, life insurance restrictions. You're overcharging or undercharging or whatever you're doing. And if you're going to trade stocks, if you want to trade Apple stock as a token on Saturday night in the United States of America with quintuple leverage, the SEC is probably at some point going to say, it looks like you're an exchange. And since we've already said you can't trade with that kind of leverage on exchanges, we have a problem with you doing it. Or if you're going to trade commodities, the CFTC is going to say, American citizens trade commodities in competition with the CFTC. There are rules, right? Like, everybody's got their regs. So if you want to trade Eagles music on an NFT network on a platform and you're actually going to upload it, try uploading an Eagles music video to YouTube and see how long it lasts before they rip it down. You're like, well, that's fair use. Can I just use, the music from the Eagles in the beginning track of my podcast? And the answer is no, you can't. Okay, so I think that as you build application functionality, you're going to invite application level regulation from the jurisdictions where you do business. And it's going to be slower. It's going to take a while for people to figure out what they think about it. And it's going to be very asymmetric and jagged, right? Like some jurisdictions will move more aggressively faster than other jurisdictions because of their political sensitivities. So that's kind of what I think will happen. And if you're making investments, you kind of have to figure out, jurisdiction am I in, right? El Salvador said, we're not going to charge you tax if you transfer Bitcoin. Okay, well, if you're an El Salvador citizen, that's a great thing for you. But if you're a United States citizen, you're going to have to surrender your passport and be an expat for 10 years before that's going to be a good thing for you.
So there's Michael Saylor on why Bitcoin is the superior form of property and will eventually eat all other property. As he discusses the future of digital assets, distinguishing between digital property, digital currency, and digital applications, he emphasizes Bitcoin's durability and integrity while suggesting that digital currencies will prioritize compliance and compatibility. Before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.